BlackRock, the world's largest asset manager, has recently unveiled plans to expand its cryptocurrency offerings by creating an exchange-traded fund, ETF, centered around Ethereum's native asset, Ether, ETH. This strategic move follows BlackRock's earlier foray into the cryptocurrency space with a Bitcoin ETF, highlighting the company's growing commitment to digital assets. The proposed ETF, named iShares Ethereum Trust, was officially registered in the state of Delaware, setting the groundwork for seeking regulatory approval. NASDAQ, a prominent U.S. exchange, is where BlackRock intends to list the product, with the filing shedding light on the involvement of Coinbase, a U.S.-based crypto exchange, as the custodian for the Ether held by the ETF. The importance of this choice is underlined by BlackRock's existing market surveillance pact with Coinbase, a crucial aspect in gaining approval from the U.S. Securities and Exchange Commission (SEC) for ETFs. Upon the announcement, the price of ETH experienced a notable surge, reaching its highest point of the day at around $2,100, marking a 3% increase. This echoes a pattern observed earlier when BlackRock filed for a spot Bitcoin ETF, triggering a substantial rally in Bitcoin's price. However, the road to approval for these ETFs is uncertain, with a potentially lengthy process that could take up to 240 days, as per regulatory timelines. BlackRock CEO Larry Fink, who had previously expressed skepticism about cryptocurrencies, has emerged as a prominent supporter. The filing strategically addresses potential SEC objections, particularly focusing on surveillance sharing. BlackRock argues that the surveillance of CME Group's Ether futures, a key component in the ETF, effectively detects spot market fraud. This rationale aligns with the SEC's previous approval of ETH futures ETFs based on a similar surveillance mechanism. Beyond the immediate market dynamics, Ethereum occupies a distinctive position in the crypto landscape. It functions as a hybrid asset, embodying both safe haven qualities and characteristics of a growth-oriented investment. Despite historically outperforming Bitcoin, 2023 has seen a shift in favor of Bitcoin, driven by the anticipation of a spot Bitcoin ETF. Investors are cautioned to exercise prudence, considering the speculative nature of cryptocurrency markets. While BlackRock's proposed ETF generates excitement, it does not alter the underlying fundamentals or trajectory of Ether. The comprehensive investment landscape includes various strategies, ranging from spot market exposure to long/short positions and leveraging, emphasizing the importance of responsible investment practices. In the broader context provided by Text 2, it becomes clear that the cryptocurrency market is evolving dynamically. Ethereum, which has historically outperformed Bitcoin, is currently experiencing a subdued period due to the prevailing excitement over a potential spot Bitcoin ETF. The regulatory landscape adds further complexity, with uncertainties surrounding the classification of Ether as a non-security by the SEC. The evolving market dynamics underscore the need for careful consideration and risk management in cryptocurrency investments. As BlackRock navigates the regulatory process for its proposed Ether ETF, the broader cryptocurrency landscape continues to shift, reflecting a delicate balance between regulatory developments, market sentiment, and technological advancements. Investors must remain vigilant in navigating this dynamic landscape to make informed and responsible decisions.